Hello and welcome to the look ahead for Friday, the 5th of July with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight, we'll be getting the results of the UK elections, where the Labour Party is widely expected to win a comfortable majority. We've also got European retail sales in tomorrow and US non-farm payroll report, as well as Canadian jobs data. So as I said, UK election results are expected overnight, but the main focus, I think, tomorrow could potentially be on the US non-farm payroll report, which is expected to show that 190,000 jobs were added in June. That's down from 272,000 in May. Also, average earnings are expected to ease slightly to 0.3%, down from 0.4%. Now, the data comes after we've had softer than expected US data this week. ADP payrolls were weaker than expected. Continuous claims rose for a ninth straight week. A record level that hasn't been seen since 2018. And we've also seen that the ISM contracted by the deepest amount in 4 years. So, there are really signs that the US economy is starting to show signs of softening, and demand for the labour market is also softening. And so, with that in mind, we're just going to be taking a look here at gold, because as we can see, this weaker data, along with a slightly more dovish tone from Federal Reserve Jerome Powell when he spoke earlier this week, and the minutes from the FOMC meeting showing that policymakers are acknowledging a slight softening in the economy, it suggests that we could actually be moving towards the Federal Reserve cutting interest rates, and that is what has got the market excited, now pricing in around a 69% probability of a rate cut in September. That was up from about 56% at the start of the week. Now, expectations of a rate cut sooner is helping non-yielding gold. We've seen that it's broken out of this near-term falling trend line. It does still remain trading within a sort of familiar range. We're needing really a break above that 23.88 level, which is the June high, in order to see it break out towards that 24.50 level. On the downside, support can be seen there at 23.40. That's the falling trend line support. But then for a breakout, we'd really need it to be coming out of that 2300 and the 2280 level, which is the May low. So obviously, if we get weaker than expected jobless claims, in non-farm payroll, then we could see gold push higher as the US dollar falls lower. Now, just going to take a quick look at the US dollar Japanese yen as well. We've seen a little bit of a weakness in the US dollar, and that's sort of seen the US dollar Japanese yen come away from that 38-year high of 161.95 that was reached yesterday. Obviously, today being Independence Day holiday, so volumes are low, but we have seen a slight sort of falling away in that pair. So if we get that weaker data from the US, then that could see that pair come down lower. Obviously, we've also got Euro retail sales, as I mentioned. Eurozone retail sales are expected to show a little bit of improvement, rising 0.2% after falling 0.5% in the previous month. Now, this is the Euro US dollar. Again, that dollar weakness has helped the Euro push higher. It's moved above the 200 SMA. It's just testing around that just over 108 level at the 108.12.15 level. Now, if we're going to break above that, that brings 109.15. That was the May high into play. And also the June high. So if we get a move above there, that's the next level that we're going to be watching out for. Obviously, keep in mind we do have the French elections this weekend, so we could see some volatility around the euro as we open on Monday. But then on the downside, if we do get weak data from the Eurozone and strong data from the US non-farm payroll report, then on the downside, we'd need a break below that 200 SMA around the 107.80 level, and that could bring 107 back into focus. Just finally, want to take a look at the US dollar CAD because we have, as I mentioned, we've also got Canadian jobs data coming in. We're expected to see job growth of 22.5K in Canada. That's after 26.7K in the previous month. Have seen a strengthening in the Canadian dollar again, despite getting a little bit of weaker data today, actually, from the composite PMI for Canada was a little bit weaker, contracted unexpectedly. But we've seen that the strength in oil has helped support the loonie against the US dollar. It's broken down below the 100 SMA. It's coming down to test that 1.36 level. So that would be really interesting if we get a break below 36, because this is the level which has offered support a couple of times, or support and resistance. It's been quite a key level across 2024. So if we do get a break below that, which is also the 200 SMA, then we could really be looking down here at the 134.80 level. On the upside, we'd need a rise above 136.60 in order to look towards that 137, 137.85 levels, which were the June highs. So I hope you like what you've been watching, and if you do, then please do give this video a like, and if you would like to see more videos like this, then please do subscribe.